Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq. Joining us for this segment, we have Russell Rhoads, Associate Clinical Professor of Finance at Indiana University, and Dan Deming, Managing Partner at KKM Financial. They join me to discuss implied volatility pricing relative to realized vol and what is impacting it. Gentlemen, it's great to see you as always. Welcome back to Trade Talks. And Dan, let's kick this off with you. Doesn't seem as if Salome is working out quite well this year, is it?
Not necessarily to this point, Jill. We are certainly continuing to push the new highs here as we enter May and now coming off those all-time highs in certain respects, but still holding on the top end of the range. And the sell in May theme with some of the dynamics in the market appear to be somewhat negated so far this year. And I think if we continue to see rates under some pressure here as we move our way through June and this rotation that's unfolding, I think that's keeping implied vol a little bit elevated relative to realized vol. But overall, the realized vol quotient in this kind of dynamic is something that I think longer term has kept the implied vols, somewhat under wraps as we move through the year.
Right. And Russell, Salome doesn't work for the NDX traders as well. Shouldn't be taking the summer off just yet.
No, not necessarily taking the summer off, but June is traditionally not been one of the better months, but then we tend to pick things up in July and August as far as performance goes. July we get a lot of mid-year numbers out of some of the big tech companies, and apparently over the last quarter century or so, those have been on average taken fairly well. And just looking at the rolling 3-month performance, if you take a look at the June, July, August rolling 3-month performance, it actually ranks as the third best performance 3-month period over the last 25 years. So getting out of the Nasdaq, at least historically, hasn't really worked for folks in the summertime. So we got to work this summer.
There you go.
We certainly do have to work. And Dan, you're thinking that market dispersion appears to be what is impacting this disparity in pricing.
I think so. I think that's why you're seeing implied vols moving higher here, even though realized vol continues to trend lower. I think we saw 30-day realized or historical vol last Friday go down to 9.5%, which is from a historical standpoint very low. Yeah, we did see implied vols jump by about 2 vol points last week, and I think that has to do with the dispersion as we closed out May. You're seeing growth, some selling pressure in the growth names, some buying in the value names, and overall, that big dispersion that we did see in those last couple of trading days last week with the market, where we did see the SPX actually move almost 2% intraday, but on a day-over-day change, still holding, well within what would be deemed a pretty normal historical vol environment.
Right. Russell, do you think there's anything there with intraday vol showing more movement than perhaps throughout the day?
Periodically we have times where the intraday volatility seems to be greater than the day-over-day volatility, but every time I've tried to do some sort of study at looking at like the low versus the high and the high versus the low on a day-over-day basis, you end up with about the same sort of realized volatility numbers. So back in the day when I was, focused on options at another exchange, we would periodically revisit that one. And the intraday volatility really doesn't, it coincides with the day over day volatility. And there's really not a huge difference between the two. Just one quick thing with respect to what Dan was talking about as far as implied vol going up over the past few days, which are the last couple of days in May. June is one of the months where on average, 30-day implied volatility underprices the realized volatility on a regular basis. About 6 out of 10 years in June, you actually have seen realized volatility overpricing, and which means that option buyers are actually doing a bit better than option sellers in June. There's only a couple other months like that. August and September and January are like that as well.
Yeah. And Dan, we've covered this before. Do you think there's any impact when you think about intraday volatility because of all the new products that have come on board, particularly zero-dated options or the dailies? Does that have any influence on the structure of it all?
It could, Jill. I mean, it's hard to tell at this point. I've never done a massively in-depth study of it. I think, Russell, I think, has certainly studied some of the aspects of that. And as you just pointed out, that when you do compare intraday relative to day-over-day vol, it really doesn't come out to be much different, even though we do realize, periodically some pretty significant intraday moves. But I think that when you look at what's unfolding here as far as the dynamics of the 0-day and the other things, I mean, I think liquidity is good for the markets in general. But, last Friday, that was quite a move. Now, that was a buy program or the sell program in the morning, the buy program in the afternoon, or the rotation, whatever it was. That was something a little bit outside of what traditionally you would see in market construct, particularly closing out a month. So I think there is some nuances in the pricing structure that you see, when you have a buy program that kicked in like last Friday that caught a lot of, I think, traders off guard. So there's those pockets. But long term, I think as the vol space evolves, the liquidity continues to increase. I think that's why you're seeing more efficient pricing of volatility.
Right. So Russell, it sounds as if, and I know you've done work on this before, so I'm curious to get your take, but it sounds as if with more liquidity coming into the market because of these products, it's a good thing longer term. But with the work that you've done, has more of these products coming online impacted the structure?
I think I think some of the bigger moves might get accentuated, especially in the last hour of the trading day. You have a lot of folks that maybe have a short option position on that they think is going to be, is going to work out quite well. Based on the cash settlement at the end of the day. They don't have to do anything, and then all of a sudden you've got an out of the money call that was barely offered 10 minutes ago, and now it's $2 or $3 bid. That is going to create some excess volatility. I'm in the camp that the 0 DTE and everything is not really a big market structure issue and not something that we have to worry about over the long run. But I can totally see something like that happening at the end of the day. And especially, May 31st, people are getting out of school. How many people do you think took the last hour off last Friday and won't do that again this summer?
Yeah.
Agreed. Yeah, I agree, Russell.
But it's typically like that, the Fridays before long holiday weekends. I mean, we see it all the time that, the liquidity and volume is so thin that it does exacerbate pricing. I mean, we saw what happened even just as recent as the Friday going into this Memorial Day weekend. But Russell, this might be an elementary question, and it probably is, but is there enough data to do significant back testing on, the 0 dated options if, they haven't been around that long?
There is, and what I've been doing, it's almost like you're giving me a layup to plug something on the Tonight Show here. But I have all of the, I basically, from the beginning of 2022, I have all the intraday data with respect to the 0 DTE options. And I have been, I haven't done anything with the last hour of the day. Every time I'm on with you, I end up having something to work on after I've talked to you. And that's what I'm going to be looking at now. But even though we didn't have expirations every day, there were a lot of people that were trading, Monday, Wednesday, and Friday as 0 DTE options. So I feel like I think I have 519 observations. I think that's enough trading days to get an idea as to what might be going on with the market.
Yeah, put those grad students and interns to work, Russell. I mean, that's a great summer project for them.
Absolutely.
Yeah.
All right, guys. Appreciate the insight as always. Thanks for joining us on Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.